thank you all for coming to the last session of the day. I'm sure we will make it super interesting and you will all have fun. So my name is Dimitrios Zamboglu. I am the CEO of UAE of Blockfields, and today I will be the host of this session. So without further ado, let me pass the stage to my colleagues, and they will all introduce themselves, including their profession, what they're doing, and maybe some interesting things about them.
Hi everyone, it's a pleasure to be here. My name's Sham Varja. I'm the co-founder of Act Systematic. We are an AI quant algorithmic development company. So in a nutshell, we've developed algorithms for the 24/7 and 24/5 markets. In the most recent part, our strategy, known as a shift strategy, as opposed to a buy and hold of Ethereum, from Q3 2021 till date, Ethereum returned 19% with a 5.6% annual return and a maximum drawdown of 81%. Our strategy in the same period with a 6-hour hold time returned 266% with a maximum drawdown of 17%. So we bridge one gap with the cryptocurrency and how we're better than a buy and hold. So for everyone who's a cryptocurrency holder, that may be of interest to you. And secondly, I'm a strategic partner of a company called Suncash International in the Bahamas. They're the world's first CBDC payment process provider across hardware and software solutions. And we aim to bridge the gap and further develop with not just the Bahamas government, but with other governments across the world.
Thank you, Sham.
Thank you. Hi, guys. First of all, I would like to say it's my pleasure being with you here, guys. I'm Asim Mansour, Head of Market Research at OW Markets. OW Markets is like a reputable broker. We offer services like trading in Forex and cryptocurrencies. Our main focus to educate traders and teach them how to trade in Forex markets and cryptocurrencies. I have been trading in Forex markets since 2012. And recently in crypto in 2017. I would like to make it fast to pass my life is to say more about him. Thank you.
Thank you. Hi everyone. I am Lalit Mata. I am basically co-founder of Prime, which is the B2B platform. We offer a platform for Forex trading platform. We are offering prop trading platform. We are offering binary option platform along with we have a retail version, retail segment also, that is called Markets. And yes, we offering, yes, I mean, of course, so Forex, crypto, and indices, and we have many instruments here. Thank you.
So, Sham, tell us a little bit about these CBDCs. What are CBDCs?
So CBDCs are central bank digital currencies. Now, if we keep it in the simplest point, it's just digitizing cash. Now, there's many benefits, as we'll go through, and there's many, well, certain disadvantages. Now, to the part where a big part that we need to differ from is USDT is not a central bank digital currency. It is in no way anything related. In fact, blockchain technology and the technology that blockchain to a certain extent works off is very different to what a central bank digital currency would work off. Now, we've got two elements of CBDCs. One could be called the central banks of the world, and then we've got another layer which is also CBDC, which is the commercial banking digital currency. So it gets passed down from the government down to the bank, which is then distributed down to the end user.
So, Asim, if I had to compare Bitcoin with CBDCs, how will I compare it? What is the differences and what are the similarities?
You know, guys, and Dmitry, it's like the biggest debate about crypto and CBDCs, it's about three concepts: privacy, security, and control. People head to cryptocurrency because they want to feel like freedom in financial markets. They want to feel they are not watched, and the central or formal entities are not like putting their eye on their transactions. In the same times, blockchain technology offers them like low-cost transactions. They can move money around the world in seconds. So the blockchain itself it's a new innovation. From my point of view, it's the time to move to a new era. We have been dealing with the same financial system for like over 50 years. So I think the blockchain and Bitcoin will drive the institutional entities to develop new system and they are talking about offering new CBDCs because of Bitcoin. So the Bitcoin is like the motive for the government to make a CBDCs. I think they will not coexist in the same time. It's different technology, but it will help them to develop new system or financial system.
Maybe you can explain us what is centralized and what is decentralized, so the audience can really understand and comprehend this terminology.
Okay, as we know, decentralization, it has no intermediaries. There is no authority that makes a transaction between people. If you want to send money, it will be transferred by, it's no like proof of work, the first type, and the second type is proof of stake. Only miners and validators like people like us will validate the transaction, and once they validate the transaction is done. You don't have to get approval from an entity or a central bank. Otherwise, CBDCs is like controlled by government. They can restrict the transactions. They can reverse the transaction if they doubt it. They have to make KYC, know your customer, AML, anti-money laundering. So people who use CBDCs will be exposed to an institution who might put more restrictions unlike blockchain.
Lalit,
Yeah.
what do you think? What drives the public interest on cryptocurrencies? Why do people like to buy, hold, and trade these assets?
I think, everybody knows about the crypto. From here, where they started and where it is right now, if we have an example like the BTC, everybody knows why they invest into the crypto. Everybody knows about the performance for the crypto, So that's a major role. People would like to be more interest rather than to CBDC. The people knows there is there's no control of any of government. There is it's like a privacy. It's called more decentralized. So nobody knows actually how much I'm making money. Nobody knows how much I invested money in the crypto, and even nobody knows where I park my money. The more crypto is like more into to investing, not into trading. So people who want to invest something in this decentralized or in digital platform, that is the crypto is the best one. So that's why the people want to be more into the crypto. It's like where no one knows actually how much money you're making,
Or how much money you lose.
But if that's what I'm saying. It's not trading; it's investing. Again, you have to hold your money. If you're looking for investment, but if you're a trading part, no one knows how much you're losing the money even.
So, Asim, do you think cryptocurrencies are challenging traditional finance?
I think they might expose some risks to banks because government like to control the money supply, and when there is a mass adoption of cryptocurrencies, government or central banks will not get an accurate statistics about the money supply, and this threatens the price stability or the price stability in any economy if there is a mass adoption of cryptocurrencies. Also, at that time, cybersecurity is the most important thing for CBDCs or cryptocurrencies. I would like to say something. This interview is very important because we help people to get aware more of CBDCs and digital countries. Recently, people invest in cryptocurrencies just to make money or profit. They are looking for like altcoins, shitcoins, and they think that cryptocurrencies is only about making money. So I think crypto have more to grow in the future. It challenged some risks. Also, people who like to invest in cryptocurrency, government have to make more regulated brokers. We have seen like brokers like FTX who collapsed. So I think crypto itself will not expose some risks to government, but if there is a good awareness for people who might invest in cryptocurrencies, the things will be more stable than that.
I believe, I mean, the CBDC and the crypto we are comparing, but still, I mean, CBDC has more focus to channelize the payment system, but I believe, I mean, and crypto is like people who want to be keep investing the money. I mean, so if you see the both are decentralized, I mean, the both are digital platform, but not the decentralized, of course. So I think CBDC and what do you call it, crypto. I mean, crypto have a different path, which is like people investing money and holding money and to just transactions where no one have a digital platform yet where they get the transaction immediately, and CBDC is just trying to the same, that they start digital platform where they can actually beat or at least compare with the crypto transactions more into the payment system, and like where people can be sent the transactions immediately. I believe this is CBDC is more focused, I think.
Correct. So when we talk about CBDCs and payments, one thing that we need to remember is there's certain processes. For example, one could be what happens when the government prints more money. It's a very costly process, from printing the cash, security assets on the cash, transport of the money, storing the money, security of the money. Now, if a government, and now this is where it starts, this is what makes cryptocurrency and CBDC so different. A government has to adopt, so a central bank, and then a government has to agree to that. So if we look at figures, I mean, 80 countries now, 81 countries, this was a McKinsey figure, will be looking into this. And with just a saving of the cost alone on transporting cash, printing cash, and also fraudulent cash. One big thing here is, with the printers now, I mean, we've only got to look at how good all the trainers, all the Louis Vuitton trainers and stuff, they're almost as good as the real thing. You can't tell now. Printing's become so good now. That's the same with cash. So CBDC, digital currencies, will take away a lot of problems. I mean, a perfect example is a tourist. If you're a tourist in Dubai, you can't actually charge your phone if you don't have and how do you get a local Emirates bank account? You need to have an Emirates ID. Now, the process to get one may be a month, it may be 2 weeks, it may be 6 months. So with the element of a central bank digital currency or a platform provider or a software solution into that, we can bridge that gap working alongside government. So this is a chain of requiring governments to actually adopt this. And how do governments incentivize people? Well, firstly, with CBDCs, there's lower fees, lower transaction fees to merchants. We can bring back with CBDCs more rewards, like what American Express used to give you, or what, I don't know if anyone had a Crypto.com card here back in the early day, but it was a very rewarding card. So there's elements of stuff required that has to be done from above before it can be implemented down. And that comes with incentives. At the moment, if I have a bank account from Barclays in the UK, someone I know in America has a Chase bank account or a Wells Fargo account, we're forced to use them accounts to a certain extent. So if the mass adoption takes place, it could solve a lot of problems, and it could also save a lot of money. And where does this money come from? Tax. So there's so many key points for this, but the main point that keeps the crypto decentralized market away from this is the returns are astronomical. But your safety, FTX is a perfect example of what OC mentioned. FTX collapsed. There was hundreds of millions, billions. Now, from what I'm aware of, the majority of the people got their money back, but that's a huge operational risk. So the central bank digital currencies don't have that risk. People feel safer leaving their money in Emirates National Bank of Dubai, in Barclays, because you have that element of centralized control and centralized safety. So it'd be a very interesting point. I'm sure we'll go on next to discuss what happens with the national debt of the country and what actually happens with that, because that's yet unknown.
Sham, very nice description of financial inclusion and innovation. Lovely. So if now, Asim, we have to talk a little bit about ETFs. Were ETFs necessary? What do you think about the Bitcoin and nowadays the Ethereum ETF?
Talking about ETFs, it's offer a new service for people who don't want to be exposed to the Bitcoin risk itself, only following up the price, and they can make profit only from getting more rise in Bitcoin price without exposed to any risk related to any platform.
What do you mean risk? Is it
The collapse of the platform itself?
okay?
Because like people like us, or normal people, only they are afraid to invest in cryptocurrencies after, especially after the news like FTX collapse, or they are afraid to get hacked, especially if they are using hot wallets. Most of people use hot wallets to transfer money, and they are scalping in Bitcoins every day. I think there are very, very few people who save their Bitcoins on ledgers or cold wallets. Adding to what you have said, there is like 1.7 billion people who are still unbanked all around the world. So financial inclusion will help people to get in the financial system. But adding ETFs to crypto markets, it's like a new role of government who like to spread the word, and they are like starting to educate people about this new market. Here it comes the government role. The awareness. We know crypto is still there, but there is no entity or like no new platform that offers people educational material about what crypto is. It's only individual efforts. Unlike governments who will help people to get in financial inclusion, will help government in welfare program using CBDCs.
Lalit, what do you think in terms of privacy and regulatory control? How does CBDCs address this?
Again, I mean, when you talk about CBDC, something is like, the regulator, even the digital platform. I mean, CBDC is something like, even you have a digital platform, but the privacy is like no anymore. I mean, they have your all transactions centralized. I mean, they have your all records, like where you're sending money. I mean, so the privacy, I mean, I believe, again, that's like I said, like you have to go with your KYC even for your digital platform. I mean, so there's no privacy when you go to the CBDC especially. And the risk is always there. But yes, the risk part, if you compare with the crypto, the platform, what we discussed about the FTX, which is a collapse and the people have lose the money. But in terms of the central bank, you don't see this part. I mean, the risk side for the client, I mean, for the user side, there's always risk-free. I mean, it's not like the collapse could be the central government, because again, it's backed by the central government. So the risk part for the end user is always a risk is good. I mean, though no risk, but the privacy, I mean, it's gonna be compare with the crypto, where people don't need to be share the KYC, and where they're sending money again, and CBDC again, they have to be take care of, have to be going through the old KYC part. I mean, which is the privacy is no anymore in the digital platform.
Yeah, I think like if a breach happens, they will help the hackers to get your personal information, not only your money. They will steal your personal information in CBDCs.
Yeah. Well, the privacy aspect, sorry, Demetrius, when we say privacy, to a certain extent, where is privacy as such? A government still does oversee and control any entity, whether that be in Dubai, the US, UK, any country. Now, if a known drug dealer was to make 100 billion, or sorry, not a billion, 100 million transaction through crypto, you'll be front page news tomorrow. But one thing that you could say CBDCs offer is an element of privacy control. Now, when I say privacy control, if there's a reason for you to be flagged up from one country to another, privacy is still there locally within a country. A government with central bank digital currencies, a government in essence has control over that jurisdiction. Now, for another government to say, right, this person is transacting in our country and we think it's suspicious, that could open up a chain for them to open another layer of privacy.
Exactly. Yeah.
So, in essence, there's so many for and against arguments, but like I said, until it's adopted, there's no real ground point. But all we can say to a certain extent is there is a large number of parts. And also, the other thing, it's very difficult for people to use cards in certain other countries. I'll give you a simple example. If you had a card, a virtual card, where you can get soft KYC, it doesn't matter at this point. If your money's through a central banking system and the same platform is available cross-border, I can effortlessly, seamlessly use my card in dirhams. I can't go to take dirhams to a store in America or a store in the UK and say, hey, I want to pay for this. But if I had a central bank digital currency, I could do that. So it opens up massive avenues. So there is, in every essence, more 4 points to go towards a cashless society. But again, the problem comes in, does everyone want to live in a cashless society? So there's a number of points for it.
You know, when you compare with the crypto, I mean, with the privacy and the central bank, I mean, of course, I mean, you know, no one knows basically, again, like there's transactions only park in the blockchain, I mean, but in a real digital platform with a CBDC under, I mean, the privacy, I mean, who's, like there's a chain, of course, like where you're sending money, who's to sending money, I mean, and the decision, central bank always have the power to control those transactions. So I believe, I mean, there's no...
But do you feel more secure if the central bank has the control?
See, security purpose of when I want to be invest money. Again, there's a comparing between the digital platform. I mean, the digital platform by the control with the central bank, of course, there is secure. There's no doubt. But when you're comparing with the cryptocurrency to be investing money, to holding the money with the volatility market, I mean, there's no mean to be just go ahead with the, you know, with the cryptocurrency for the transaction purpose. I mean, I believe the digital bank platform by the CBDC is okay, where you can be, you know, secured purpose. But when you want to be transaction investing money, I mean, that I believe the crypto is more effective.
Sham, you want to say something about security? You feel more secure if a central bank knows exactly where you are, what funds are in your wallet, they can block, unblock your wallet, they know who you send the money to. Do you feel more secure, or do you believe decentralization might be even be better?
Well, in terms of, now there's two parts to this. If we say a person who had a crypto wallet from 2016 or even 2018, whenever it may be, that money to say, is it stored not on a hot wallet? So you avoid the problem of FTX and it collapsing in a centralized exchange. Now, if you avoid that problem, I've got my crypto storage on a cold wallet. I've now got it on a ledger. How big Ledger, the company, has grown, to an element, it has become centralized of how many crypto wallets they hold, whether that be offline or online. It's still centralized to a certain aspect. Now, what's the element of safety here? Do I feel if I lose my USB stick, I've lost my money? So, yes and no. But at the same time, how much control would we say we really have? If like I said, if you are watched or you are doing something that's illicit to a transaction, what happens in the conventional banking system, then realistically whatever you hold is seen. Now that goes back to the point that Lalit mentioned about it's easier to use Bitcoin. I agree completely. It's easier to transfer Bitcoin. If we say remittance, if I want to send you Bitcoin, it's one currency. If I want to send you Ethereum, it's one currency. If I want to convert that Ethereum to Bitcoin, it's still one currency. But what happens when you convert Ethereum to Bitcoin? It goes through a centralized process. So we come back to the element of, do I feel safer if my money's in a bank? Yeah, pretty much everyone would do. You trust your money because if I go to use it, if I want to buy a car, it's in a bank. If I want to buy a house, you can buy a house with cryptocurrency, but there is still, it's a grey area, I suppose, in certain aspects, but we don't know. It's still too early to say.
I think we're moving towards centralization. The more the technology is evolving, there will be definitely an aspect of centralization. especially if you're moving towards some kind of digital fiat where CBDCs are?
I mean, 100%, we're definitely going to see it. It's just how soon it's adopted. So, for example, Suncash International, who we're part of, we looked at this, and in the Bahamas could be seen as an element where people from the US leave their money. So the US dollars in the Bahamas is substantial. Now, we take in dollars and give back a central bank digital currency in dollars. This technology that we've made is both hardware. We've got ATM machines, kiosks. We've got payment gateways into a Visa MasterCard. Now we've got API white label kits. We've got everything to incorporate into the world to give that financial inclusion, but still have that element of privacy layer, what we were talking about earlier, where the Bahamas government have control over people in Bahamas. The UAE government have people who control over people who have got money in the central banking system in the UAE. Same with America. Now, like I said, the privacy doors are opened up depending on what the governments decide on that particular holder. But as far as where do we see ourselves going, it will eventually go that way. There's too many plus points against too many negative points. Double spending. Now, the biggest question that remains is, what happens to the national debt of the US, which is the world reserve currency? And in this time, we've never seen, well, the last change of the world reserve currency was, I think it was around 1920, and that was a pound. So that was when the pound was the world reserve currency. So we're approaching every 100 years, we do get a change in the world reserve currency. So what happens to the national debt of America?
That's a very, very big question. I think we will leave that for the end. But as Sim touched very nice before, the cross-border payments, the remittances, what I want to understand, is it better to use stable coins when you do those kind of transactions, or is better to use something like a Bitcoin, an Ethereum, or even an XRP that was supposed to be useful for this kind of transactions?
Yeah, actually, we have seen a very big crisis to Salvador when they bought a lot of money of Bitcoin and the price went down. They were really like nervous and afraid, but we have made a big mistake. Then we were right when the price rise. Here is the problem. It's very difficult to price any commodities or service with cryptocurrencies. It will be like this, still like this until the cryptocurrencies market cap goes above $10 trillion or get close to stock markets. The problem is in many Arab countries nowadays, they used to use USDTs to transfer money outside the country, and this money don't go through banks. So here is the problem. The money supply is not accurate for the government, and it affects capital flows of the many countries who would face a very big problem in controlling money supplies and deciding, like Sham said, national debt. It might be misleading for the government and policymakers. So I think CBDCs will help people transfer their money easier, but for my point of view, I suggest a solution for people who are afraid to be controlled. They will be more secured, but more controlled. I suggest that central banks make like many tiers of people. Tier 1, they will not watch you, like a specific amount of, under this amount, we will not you, as if we believe them.
It's like tax, no tax up to a level.
Yes, above a specific amount, we will watch this transaction and we may reverse it or restrict it, like because they have to prevent money laundering. So I think if they put more rules about what the laws that will control CBDCs, people will get more trust in it and will solve the problems that cryptocurrencies face at the current time.
Maybe you want to say something, Sham?
It's, well, in terms of, this is what we were going back to, how easy it is to transfer Bitcoin to Bitcoin, USDT to USDT. Now, if you already hold something, whether that be offline, online, for an exchange, If I want to send USDT to you wherever you are, it will arrive on the blockchain verified in seconds. So I still think the element of being able to move funds in remittance across the world, USDT is the safest option. It's pegged against dollar, and so far, there's cliche in USDT and what they actually have in reserves. Now, one part, there's many other stable coins. Now, a stable coin to a CBDC is very different. One that you could say is very credible is the Gemini USD, the Winklevoss twins that had that. It's a very credible. They've got all the reserves, all the reserves they have in Gemini USD as a stable coin is backed against what they have in the reserves. But as far as remittance goes, I 100% would say the transferring cryptocurrencies is a lot more less friction.
You know, in terms of the transaction, I believe, in terms of the transaction, when we require to transaction, just transaction means where we have to transfer the funds, mostly, I believe. So, you know, of course, the stable coins will always be good. You know, where you will have a lower cost. Of course, there's a cost. It's always lower. And when you transaction specific amount to someone, you expect the transaction amount should be getting the same amount of value. The stable coin, of course, helps when you have a specific amount and the lower cost. So I believe the crypto stable coin is better than the one.
But do you think now, let's say like a country like El Salvador, let's say a country near the Arab region decides to launch fully CBDC. So from tomorrow, they're stopping any fiat currencies in the market. Do you think it's feasible for such a technology to be spread so fast?
I don't believe. It's a big challenge for them and the CBDC with the government as well to be managed a digital platform. You know, in compare of the crypto scene. You know, there are a lot of risk. Like higher technology in the market. You never know. You know, the transaction which is happening depending basically on the technology. I'm not sure. I'm not believe. The government is ready to take a challenge to manage the technology for the digital platform for fully without the technology. I'm not sure about this.
What do you think, Asim? Maybe the bank should add the CBDC first connected to the account? Because as Lalit is saying, if we just launch the app and force everybody to use the app, many people do not have a mobile phone. So like your father and my father might even be difficult to access an application. Yeah. So how government should go around for CBDCs? How can they implement it?
Yeah, till now, Dimitris, some people like go to the branches to pay in cash. Till now, MasterCard, Visa, USDT, and they go to pay in cash. So imagine if they enforced CBDCs. I think they cannot force CBDCs on people, but they may encourage people to use CBDCs, like adding some fees if you paid in cash. Unlike now, you go to some stores, they tell you have to pay like 1% on your transaction if you used Visa. I think it should be vice versa. If you paid in cash, you will pay 1% extra fees. By this way, by the time people will start using CBDCs, they also have to deregulate the process of using CBDCs. They have to make like KYC more easier, applying it by online easier methods. So by this way, also government have a good advantage. They can control the entities that like adding to CBDCs, they can include it in their welfare program or social program. They can pay people by CBDCs. If you want to get your money from your government, open an account and use your CBDCs. If they pay you in cash, you will tell yourself, I don't have to get my CBDCs. So there are many ways for government to encourage people, not to force them. Because, you know, people are afraid for things that they are forced in. By this way, I think we are going to see more CBDCs, especially starting from China, through USD dollar, digital dollars. Till now, I think like 127 countries already have a soft launching for digital currencies till now, and this number will increase in the future.
So yeah, no, you're right on that part. Now, this is a question I actually get asked quite a lot in terms of, we have a system that takes in, we take in cash, but then we also allow you to withdraw cash. So it's a double spending problem. It takes away the aspect of converting your fiat into a digital currency, but at the same time, you can re-withdraw it. It's meant to do less, but overall you can still withdraw it, so it poses a problem. So nothing will be perfect. I think, like I said, I mentioned at the start, the printing of money, that's quite a big plus point when you look at how much it costs to a government, which in essence, in most countries, goes down to what it taxes the general person. Now, there is so many points, but one thing that will never die down, if you pay in cash, the same note that I give you, there's no 0.5 or 1% transaction fee. If you pass it down to London, there's no transaction fee. We pass it back down to Demetrius, there's no transaction fee again. One thing that CBDCs will do is provide that element of much more cheaper costs. So, like I said, if we look at the conventional way money's moved, a cashless society, whether it's Bitcoin, and now going back to, you could say any point of this, it solves more problems than it creates. Now, Demetrius, what you mentioned about Salvador, they tried to adopt the whole cryptocurrency Bitcoin
They're
part.
trying really, really hard.
Now, I've held Bitcoin, Ethereum for a number of years, and the main reason we automated our strategy is to avoid the waking up every day and seeing it drop 10%. So, like I said, we built something that still handles volatility, so it's traded at zero leverage, which in essence requires volatility, but there's plenty of volatility in the Bitcoin market. Now, would I trust that as my currency to live off daily? Never, I'd never sleep. So there's too many points to say, yeah, Bitcoin's great, cryptocurrencies, decentralized assets are great, but at the same time, would you really be able to sleep knowing that your money is in a cryptocurrency? Your life savings are in a cryptocurrency?
It's definitely not going to be an easy sleep. We touched before a little bit in the US national debt sham, and we said that what will happen when CBDCs come in play. I believe it will be a lot of accountability from the governments, at least. We will know where they are spending the money, and in a way where the money goes missing, why we are in this deficit. Especially with the US national debt, where do you see CBDCs helping?
Realistically, that is the hardest question to answer. What actually happens if we adopt a central bank digital currency? Does that theoretically create a new currency? Do we wipe out the debt of the national debt of the US? Do we de-dollarize? At the moment, we're at a crucial. We know eventually we are going to have some kind of financial crash. The global recession is coming. The stock markets cannot hold the sustain. They can't sustain the growth they have. It's been exponential growth. Now, how much more longer can Nvidia drive the Nasdaq? How much more longer can the S&P keep rallying? Everything has to correct itself. Now, what goes up must come back down. That's just the law of averages. The only thing that we've got at this time round is we have wars going on worldwide. We've got a question of the world reserve currency and a national debt, a national $36+ trillion debt that realistically cannot be paid off. So do we wipe it off? What happens? Is there a new world? Does a new country take over the world reserve currency? Are we seeing a shift of power from the west to the east? It's very likely. But at the moment, until it plays out, we can only say we go by what happens. But this is the only time that we can say that the national debt of the US has gone too high. And if we look back historically, every 100 years, you get a change in the world reserve currency. So I'm not a historian. I never did well at history at school. But I can say that it was a pound, 1820 to 1920 roughly. It was a pound just before the First World War. And then before that was, I think it was
So it was a guilder in Holland.
Asim's better at history than me. So before that, prior to that, I think it was Holland who had the world reserve currency. Holland?
It's called the guilder currency.
Oh, okay. There you go. So we're at a time now where we don't live generally for 100 years. And if we do live that long, we're going to forget everything that happened. So there's multiple points for and against it of what will happen. I think the biggest question is, we can call it a conspiracy. It's not a conspiracy, it's history. Will history repeat itself? It generally does.
I would like to close this panel, starting with Lalit, telling us his views on CBDCs. When do you see this technology coming in play, and at least some one of us in this panel holding CBDCs in their wallets?
See, again, the technology comes when you say CBDC technology. I mean, so I believe, yes.
Is it 1 year, 2 years, 3 years, when we will have this, especially in the UAE, where everything moves?
I believe it takes time. I mean, it takes time. I believe it takes the 3 years. I mean, it's like a more challenging for the banks even, in terms of technology. They have to be work a lot of technology with the partners. I mean, then even the first, they have a challenge to make their own digital platform with the technology, and then later on they have to be, very comfortable with the end user. I mean, so I believe it takes time. It takes next 3 years, so at least, to be to part of the CBDC we hold in the wallet.
So Asim, 3 years, 2 years?
Yeah, that's 3 years.
It might take 20 years if they don't collaborate with blockchain experts.
But what do you think it will happen?
I think less than 5 years, because
Less than 5.
I have read there were a white paper of a digital dollars 5 years ago, and they still didn't launch the digital dollar till now. So it takes some time, but for now it will be faster because there are many blockchain experts now, and this is a new technology, new innovation. So government will collaborate with these experts to build a new infrastructure for these CBDCs in the future. But we have to work on the technology itself before working on CBDCs.
Sham, more optimistic or less optimistic?
I'd say realistically, with the work that we're doing already across multiple governments now, I think it is happening quicker than everyone thinks it is. We all know that we're going to a cashless society. So the adoption process, in essence, is happening. It's not going to straight away, like I said, that we can talk about the extremes of it's going to wipe out and de-dollarize. That's a theory, what it could do. Is it doing it already? Yes, it is. Are we switching to certain digital currency? Has certain countries gone completely cashless? Yes, they have. So if we look at, I'm just looking at the figure on my phone a second ago, and it will save, just by printing cash alone, it will save 400 billion annually. That's 80 to 90% less in cost alone. So I'd say realistically, if we had to give a time frame, anywhere from 6 months to 2 years.
Thank you very much, guys, for your answers.
Thank you.
Please give a hand of applause to our perfect panel.
Thank you.